and this is going to be recorded. Okay, so last week I really just gave an overview of what you're really seeing on the screen here, but let me just back up a little bit so that we start with a blank slate. All right, so Forex representing foreign exchange market. This is just simply the movement of money across countries, right? Usually the major players would be hedge funds, banks, countries, central banks, really, that are really buying and selling across borders. And that's where that flow of money goes. We're talking about multiple trillions of dollars daily. And we are really just, I like to say, like shrimp in an ocean, right? We don't really do much, but we still can take some of that out in the market. So looking here on the screen, this is a chart. And for those that's your first time, what I'm going to be saying is this chart represents the time. If you look at the bottom represents time. The right side of the screen represents price. So this is really what did price do over time when it relates to the British pound and the Japanese yen. Anytime you see a chart, there's all more often than not, there's going to be two currencies matched next to each other, and it's going to be the seesaw relationship between those two. All right. So this chart, it simply says for 1 British pound, we're going to get X amount of Japanese yen. All right. So if you look at the current price is represented by, if you look at the top right of your screen, you're going to see 212. So if you went to Google and you said, hey, what is the exchange rate of the pound to the Japanese yen? You're going to see 212, 211, maybe 213, anything like that, right? That's the current exchange rate. That's saying for 1 pound, you're going to get that much yen. Now, what this chart is doing, it's showing us the fluctuation of price over time. So right now I am looking at the view of the changes in price on a weekly time frame, right? That's what this W is for. These 1, 3, 5, 15, 30, 1, and 4, those represent the time frame as well. The minutes have the M, the H represents the hour, D is daily, W is weekly, right? So what this chart tells us that on this day, 19th of September 2022, for 1 pound, you would have gotten 149 yen. All right. Back in 2020, the 16th of March, you would have gotten 124 yen. And today, like I said, you get 212 yen. All right. The further away the exchange is, then that's kind of telling you which currency has the more strength. So if you get the closer you get to 1 to 1, all right, it's going to tell you that these currencies are equally weighed. So if you keep getting more and more yen for 1 pound, that's telling us that the value of the pound is getting stronger. All right, so that's just a little insight to what we're seeing on the screen. Now, to the one thing that we're going to be talking about. Let me show you here. All right. Okay, just trying to get this lined up. All right, perfect. So the first thing we're looking at is, all right, let me just get rid of this one. Let me get rid of the second one. So we just focus on one at a time. All right, what we are looking at, or what we looked at last week, is this pattern. All right. So when we first learned numbers, we learned how to read. We first of all had to get into some pattern recognition. Right. We had to learn how to recognize these things so that when they show up, we know what they mean. And then by combining those things together, we can get a better picture of things. Right. So if you have a square with a triangle on top, you know that feels like a house. If you learn your letters and you start to have certain letters together, we start to build words. After putting words together, we start to build sentences. So we are at the foundational level just because we're the second week of the new year. So we started back over at the beginning. So this shape, right, represents the flow of money, right? It always goes up, comes back down, continues to go up. This is when we're looking at money increasing in value, right? It doesn't just shoot up in the air like a rocket. It doesn't just do this. It goes up in stages, it goes up and down, right? And it goes across as well because it's over time. All right. So it goes up, comes back down, goes up, come back down. And this is what we call the ABCD pattern. Now, what I'm going to tell you now is the one thing that I wish I learned when I first got started in learning how to trade. If we are looking to buy, we're expecting price to increase in value, we are going to buy at C. This is something that we covered last week. All right, it's something that we covered last week. So Rhea, if you ever wanted to know, like, okay, how does this Forex thing work? We buy when price gets to C, simply put. And the reverse would be we sell, right? Because it just goes in the opposite direction for a sell, down, up, down. It's going to be the same thing, right? We are going to sell at C as well, right? Just that the flow of the letters is a little different. It'll be A, B, C, D, all right? And this is an oversimplification of everything, right? The reason why we buy at C and sell at C, that's going to come with time. But for the sake of this conversation, for the sake of today, all I want you to recognize is we buy at C. Now, where I'm going to take this is we're going to spend a little time on this A to B side of life, all right? Just from A to B. Because when price moves, it goes up and it comes back down, it continues going up. A to B, remember I showed you the different time frames. A to B could look like this just to keep things simple, but in reality, to get from A to B, that also does not move in a straight line. But it's going to show you this pattern repeating itself constantly. So it's going to look like this. We start at A, price goes up, comes back down, goes up, comes back down, and it just keeps doing this. All right. And this is going to tell us the structure of the market. This is what just how price continues to grow. All right. So this is A, B, C, D. Then it repeats itself. So then this starts off, this then becomes the new A. So A, B, C, D, and then A, B, C, D, and then A, B, C, D, continues, continues, continues. As long as this keeps happening, we are in what we call an uptrend, right? And when we're talking about trading, price only moves in these three directions, right? It's going to go up, it's going to go down, and it's going to go sideways. Up, down, sideways. Whoa, sideways, Kurt. When we say price is going up, we say that it is bullish. When we say that it's going down, we say that it's bearish. And when we say it's going sideways, it is ranging. All right, so these are just some trading terms that you can take for your notes. So if you ever been to New York, you've walked along the New York Stock Exchange and Wall Street, sorry, you would have seen that bull. The reason there's a bull there because the bull represents the up movement. Because the difference between stocks and Forex is we mainly make money in the stock exchange where price is increasing in value. So we get really excited about bulls. We want to see bulls. But in stock exchange, if bears show up, if price is going down, that means your company is not doing very well, and that's a bad thing. In the foreign exchange market, we make money both ways, price going up and price coming down. All right. So with that, let me know if you guys are following me so far. Ria, are you good? I know you told me that you are brand new, but just let me know if you feel like you're following so far. All right. So far, so good. All right. Now here's where it gets. We're gonna go a little deeper. So remember I told you from here to here, this is A to B. This A to B is the same thing. This A to this B is the same thing as this. All right. Two of these are the same thing. This drawing that I put here is the principle. This is how price moves. It goes up, comes back down, goes up again. As long as it keeps going up like this, it's going to end up looking like this kind of staircase kind of vibe. Okay. Now I'm going to break down what this structure actually looks like. When price moves up, this is called a high. When it comes down, for the first time, this is going to be a low. This one, this high is higher than this first high. So we call that a higher high. This low is higher than that one. We call that a higher low. And it just keeps going like that. As long as we get higher highs and higher lows, price is in a bullish trend. As long as it continues to give higher highs and higher lows, we're in a bullish trend. If we ever stop getting higher highs or higher lows, so let's say this is price, instead of creating a higher high, if instead we get something like this happening, right? Then we're no longer going up and we've shifted the momentum. We've changed direction. But for the sake of today, we are only talking about buying so that we learn one thing. So where we are right now, let me know if you think you have an understanding of market structure for a bullish trend, higher highs and higher lows. Once we keep getting higher highs and higher lows, we're going up. If we ever stop getting higher highs or higher lows, we could be going down, right? Don't don't take it any further than that. Once that's happening, we're going up. Awesome. Now, and once we've identified a trend, we now know what direction the market is going in. This is very, very important because we want to know if we're going to be buying or if we're selling. Once price has shown us that it's created a trend, then we want to buy at the higher lows. So if we were going to place a buy, we would look to buy here. We would buy here, also here, and here. Now, these higher lows, the higher low is the same thing as C. All right. Let me know if we're good here. Higher lows is the same thing as C. Awesome. So now that we know that, we're going to have to go look at this in the wild, right? Because when you're trading, you're not going to see these little lines like this. You're going to be seeing things called candlesticks, right? Let me show you what those look like before we actually see them in real life. These candlesticks are going to give us information about what is happening. But what we're looking for specifically right now, this is going to be, we're going to go searching. We're going to go hunting to make sure that we see these candlesticks that I'm talking about and you understand their value. So a bearish candlestick is usually red, right? So you can change the color to whatever you want, but for the sake of our conversation here, a bearish candlestick is going to be red and a bullish candlestick is going to be green. All right. Price is going up. It is bullish. If price is going down, it is bearish. Bearish, bullish. All right. Now, when we see this happening, right? Price is going up. All right, let's back up a little bit. All right, so price was going down at one point and then it started to go up. All right. When this happens, there are a bunch of candlesticks that form going up this way. All right. And these candlesticks give us a bunch of information. What I want you to know is these candlesticks tell us how strong of a push price is moving. Like how quickly is it going? Is it taking a long time, like a whole day, just to get from this price here at the bottom to here? Or would it happen in like 5 minutes? Okay. The candle, the size of the candle is going to tell you the strength of it. And that strength is going to show like how quickly this could happen. So sometimes you can have one candle that can take up all of that space. Other times it may take a lot longer. So we are currently looking at the 15-minute time frame, which means it takes 15 minutes for one of these candles to form. If there's one candle, that means it took 15 minutes to get from this price to this price. On the other hand, if they were, let's say, four, and if we are on the 4 hour, if we are on the 15-minute time frame, and we have four candles forming, 15 by 4 is 60. So it took us an hour. All right. This could take us an hour to get up there. Are we good? All right. So let me just put this little note here. Each candle that we're talking about right now equals 15 minutes. All right. So, all right, cool. Right now we are viewing these candlesticks on the 15-minute time frame, which means every candlestick takes 15 minutes to form. All right. It takes 15 minutes to form. It's going to start down here because it's bullish. It starts at the lowest point and it goes up. If there was just one candle, it just moved from here to here, that would have taken 15 minutes. If we saw four candles form instead on the 15-minute time frame, this would have been like 7:15, 7:30, 7:45, 8 o'clock. All right. On the 15-minute time frame, it took 1, 2, 3, 4 candles to get from this price at the bottom to 12.5 to up here to 12.7. All right, sweet. So that's just what I want you to follow right now. All right. Now, when we are looking at the chart, one of the main things we want to be able to identify is what the momentum is. We want to know what direction price is going. Now, everything that we need to know is going to show up on the chart. But this is where that pattern recognition that I mentioned earlier comes into play. All right. So we want to know what can we look for that tells us, okay, price is looking to move and go up. So there are three ways that can show up. And this is using candlesticks to see it. All right. The first thing is called an engulfing candle. All an engulfing candle is, it's a lot like Kevin Hart and The Rock's relationship. All right. One of the candles is going to be really, really small, and the other candle is going to be really, really big. This green candle, out of these two, this is the engulfing candle. And that means that this candle grew bigger than the one previous, the one before it. It got bigger. All right, so this is a bullish engulfing candle. You get the red candle first, you get the green candle after, and the green candle grew bigger than the red one. That's a bullish engulfing. This tells us that price is really wanting to go up. All right, that's just an indicator. Just so you have it, the alternative, a bearish engulfing candle. Remember, bearish means price is going down. Uh, yeah, bearish engulfing, price is going down, is going to look like this. We start with a bullish candle. So we start with a green one, but then we end with a red one. So this is an example of a bullish, whoops, engulfing candle. And this is a bearish engulfing candle. All right. The only part you need to remember for right now, for the sake of this conversation, is the engulfing side. All right. When we say it's engulfing, that means the second candle that formed is bigger than the first candle that formed, right? Significantly bigger, I should say. Whether it's bullish or bearish or not, it depends on what the first candle is and then what the second candle is. All right, cool. So I'm gonna move these bearish ones, sorry, bullish, and we're gonna go here. So we have this bullish engulfing, which looks like this. The other thing that we might have, the other way that this might show up, because it's not always going to be the same pretty thing that I showed, that's more of like the perfect scenario. Another way that this situation shows up is like this. Rather than a red and a green one, sometimes we get two green ones, right? And one green one has this little line in it, like a candle wick. It's literally called a wick, but it's still one small and one big. All right. And for the bearish example, it's just that both of them are going to be red. If you are following me so far, type AC in the chat. All right, so this is another example of an engulfing candle. There's the red first and then a big green one, or we get two green ones, but the first green one is small and had this little wick in it. And then the bearish one is just the opposite of that. And now the other example of this is going to be three candles, the same color, that they show up like right after each other. So like 1, 2, 3. These are all examples of a bullish candle, right? This is going to make a whole lot more sense as we build on it. But for now, we're just going to see if we can find these three on an actual chart. And by looking at the chart, you're going to see what has happened, all right? Because anytime we have price come down and go up, the reason it went up, or what usually happens close to this point, is one of these shows up. Some sort of engulfing candle happens in this space to tell us, hey, I'm looking to go in this direction. All right. So when we say that learning to trade is a skill, it's really a skill of getting good at recognizing patterns, a little bit of hide and seek. All right. So remember, I showed you up here in a bullish trend, we want to buy at the higher lows. Based on what I showed you, at these higher lows, we should be seeing some sort of engulfing candle showing up. One of those three. All right. So that's the thing that we're going to go hunting for. Let me know if you're clear. We want to buy at C. We want to buy at the higher lows. But the thing that we're looking for is going to be those engulfing candles, right? Whether it is All right. This type of engulfing candle, this type, or this type. All right. Now let's go hunting. All right. So in the interest of time, what I did, I went ahead and tried to identify some of them for you. All right. So I got this question mark here. We're looking at these two candles. Let me see if I made them bigger. All right. So we're just looking at these two. Remember, I showed you we have a green candle that has a wick on it, and then we have a bigger candle. This right here, example of a bullish engulfing candle. But then we also have one, two, three, four of these candles going up. And we can see that price move from here pretty quickly and kept going. All right. Here we have that example once again. This one is small. This one is significantly bigger. All right. It's really showing the intent. Then we have this one right here. Whoops. All right. Similar situation here. Yeah. So even if you see some outside of the ones that I point out, that's completely fine. I just want your eyes to get used to seeing them. Yeah. One small, one that's bigger. All right. Small, one that's bigger. Sometimes, like when in my early days of learning, I used to get confused. So I would think that these two would be an engulfing candle. Anybody in the call thought that this was an engulfing candle? Or was my explanation so precise that you guys are super confident and light years ahead of me when I started? Let me know. Okay. Doesn't look that way. All right. So now we are looking over here and we're taking a look, right? We got a small one, bigger one here. Small candle, big candle here. All right. Bearish engulfing candles. So they can show up in both ways. All right. Cool. So those are those candles. Those are the some examples of these engulfing candles showing up on the 15-minute time frame. Now, we're going to change time frames and we're going to look at these candles some more, right? Because they show up on all time frames. It doesn't matter what time frame we're on, they show up. Let's see. Let's do the 1 hour. And we're going to look in this blue, we're going to look in this blue area here. All right, this was a 4 hour, sorry. All right, so we were on the 15-minute before. Now we're looking at 4 hour. So each of these candlesticks, like they look exactly the same, but each of these candlesticks took 4 hours to form. All right, each one took 4 hours. And this is a bullish engulfing candle. All right, we got a small one, a big one here. Now we got bearish engulfing because these are coming down. You can see that we started at this point and we started to come down. All right. And these last three. All right, this is a bearish example where the three candles, one after the other, right? Okay. Is that a question, Kirk? Or your mic was just unmuted by accident. All right. So we're gonna keep it going. Interesting thing about these engulfing candles. All right. So let me go back to where I was drawing before.
Yeah.
What these engulfing candles also do is when they show up, right? When they show up, they represent a large amount of volume, a large amount of money entering the market. Those are things that we want. But they also pinpoint an area that we could pay attention to for price to eventually come back to. All right. So what I mean is, mm, if this is what is happening with price, right? So price went up because it always goes up and comes back down. Eventually, price is going to come back down. And if it comes down, if this is where it started, and for whatever reason, it starts to go back up again, this occurs because there's likely to be some sort of engulfing candle that formed on this side of life. And because there's so many, like, I want you to imagine that in this area, there are a bunch of people that are just pushing up, right? There are a lot of people doing this. Like if this was volleyball, a lot of people down here pushing. When we get above, there are a lot of people up there that just want to spike the ball down. So when we have an engulfing candle, some sort of engulfing candle showing up over here, right? Bullish engulfing. This is also giving us information that it's possible sometime in the future we could see price come into this area or near to this area and then continue going because there's still volume there. There's still people there wanting to push price up. Okay. And that's kind of like how price keeps growing. That's how it keeps going up and down. So when I drew this simple shape, let me draw it again, right? The A, B, C, D. The reason C allows us to, we want to enter at C and go up is because there is what we call volume showing up right here. Pause there for a second. Let me know if you think you're following me so far. All right. Or if at the very least, you feel like you're following, but it's not completely crystal, right? You feel a lot better than you were when you got on the call at the beginning. All right. Ria, how we doing? You're not lost. That's good to know. That's good to know. All right, so here's what we're gonna do. We are going to take a look at this. All right. Here's what I was doing in this area. Um, I put this red box where engulfing candles showed up, right? These are all bearish engulfing. Bearish engulfing because price is going down. Okay. Price has been going down. So watch this. What we're going to do is we're going to delete some of this time that happened. We're going to pretend that nothing past this point has occurred as yet. And we're going to watch it kind of play out. So we came here and we saw there was an engulfing candle. Kirk said when an engulfing candle shows up, we can use that area as a place that price could potentially come back to. If it does come back to, this area, and it stays within this place. So the persons, all the spikers in this zone, if they stay on the court, when price gets back there, they're just ready to block. They're ready to push price back down. All right. So if this happens, we would be expecting price to come back down and sell, right? And keep going down. That's what we would expect, right? But the engulfing candle isn't just in one place. So we have this one here. And we have this one here as well. I gotta make that red. And this is literally what you guys are going to be doing when you start to look in these markets, right? And what we do is the we include the wick. You see, we got the body of the candle, the little green part, and this little bit that went up. We include that. All right. And we come down again and we see, all right, there's another engulfing candle here. So we use the body of the candle that has been engulfed. For the sake of this conversation, can I call all small candles Kevin Hart? Can I do that? I think that's a lot easier than engulfing. So what we do is we draw a box, right, to show the height of Kevin Hart. But in the event that we have a big candle that has a wick, right, that's taller than Kevin Hart, we include that wick as well. So guys, trading, it may sound glamorous from, I mean, the money that people have been able to make over time. But this is what you're going to be doing. You're going to come on the screen, you're going to draw some boxes. Like imagine if your job description is, or the way that you tell people like, so what do you do? Well, I draw boxes and I make money. What you what you mean? You making money by drawing boxes? Yep, pretty much. It's pretty much what I'm doing. All right. So we have this engulfing candle and then we have this one. All right. And we're going to see what happens. We are going to see, or I want you guys to watch to see if when price gets into any of these red boxes, is there a reaction? And when I say reaction, what we're looking for is price to go down, right? We want to see price come into one of the red areas and get spiked back down. Where's my play button? Oh, hold on. You guys saw this here? You see down here, we had a bullish engulfing candle. I used the entire height of Kevin Hart, right? So this whole blue box is what we were looking at. Price came from here, came down here, and then it went up, right? This is not to say once you draw a box and price comes into the box that you just hit buy, but for the sake of this first conversation, right? On principle, we're talking about you want to pay attention to these areas. So price is now in this red area. Let's watch and see what happens. All right, we had a little reaction outside of it, but it didn't keep going down, right? It kind of got a little higher up. Whoops. All right, we see this once again. Let me get, where's that down arrow? So about right here, we see price push down. Then it came close to this area that we're looking at. Price push down again. Let's see. Does it keep going down? All right. So let's see if we can spot any engulfing candles. Remember, those engulfing candles, they tend to show us that like, hey, I want to move out of this area pretty quickly. So price came here, it did push down. We don't have 3 consecutive purple candles. We don't have an engulfing candle, but price came back up. Still no engulfing, still no engulfing. Hey, we got an engulfing candle right here. All right, so we put Kevin Hart in his box again. Price pushed down, came back here, and what do we get? Another engulfing candle. All right, so I'm going to draw that pattern that I showed you guys earlier, right? Remember I showed you this? Whoops. This is A, B, C, D. And remember I said we want to sell at C. We sell at C because there's probably some sort of engulfing candle formed on this side. Watch this. If I take this and I drag it back over here, right? Does this look familiar? Let me know. Are we following? Are you seeing what I was saying? All right. So, I would love to take this particular thing further, but I think we can stop here. Um, this is pretty much what you're looking for, right? Once you draw in your books, so I hope you at least drew the pattern in your book. This pattern is what shows up every single time. It shows up on every time frame, whether you're on the daily, the 1 hour, 15-minute, whatever. This point is where we want to sell from. Or in a buy scenario, we want to buy at C as well. There are more questions that you're going to get answers to as we grow in this space, like why do we buy at C? Why does this stuff happen? Right? But for right now, just on principle, we just wanted to get in the habit of looking for these engulfing candles. Those candles are going to show you where your spikers are your what setters. Anybody play volleyball on the call? Your set, I think that's what it calls setters. Telling you where the spikers or where the setters are. The setters push the market back up. Spikers push it down. All right. Once you know where they are, you know where to put your attention. What your education is going to do as you learn more is when price ends up in a spike zone, you're going to know what to wait for, right? Because you have to get the confirmation, right? You have to make sure that it is very likely that this spiker is actually going to connect with the volleyball. It's not going to fly past them and keep going up in the air. You want to make sure that they're going to connect. And this takes a little bit of time, understanding a few other things. The example I like to give is you are driving, you're currently on a minor road, right? You're on a minor road, and then someone is coming on the major road. They're coming towards you, and you see that it turned on the indicator. When you see someone put their indicator on and you're sitting at a minor road, do we just drive out or do we wait? Let me know. Do you guys drive out or you wait just to make sure this person actually wants to turn? For sure. I'm a defensive driver. I tend to wait. I wait first, right? Because I've had a scenario where I've been driving and my hand may have just hit the indicator. I didn't mean to turn on the indicator, but it happens. So you gotta wait. One of the things you wait on is if this person is going to turn, you know that they're going to start to slow down, right? They're going to slow down because that's just a smart thing to do. So first thing you did is you wait on the car that has the indicator. As they get closer, you're gonna watch. You're like, is this person slowing down? If they slow down, you have more confidence in the fact that they might make the turn. But we still don't pull out. Still don't pull out. We see them slowing down. Just like, all right, let me make sure. The third confirmation is that they actually commit to the turn. They slow down and you see the car start to turn. When they start to turn, you move, right? But you waited 3 steps. You let those 3 things happen before you go. Same thing with trading. The price being in the area that these spikers are showing up, you still need to wait first. because there are a couple more steps that's going to tell you for sure if this spiker is going to connect with the ball and push the market back down. All right. And spikers or setters are not trading terms. I'm an art student, so I speak in visual metaphors. But if it's helpful for you guys, I'll keep doing it. All right. So we just wait first and then we continue. All right. So Um, next week we're gonna have a lot more time together. But with the next 3 minutes that we have, if you have any questions based on anything that I went through tonight, go ahead and let me know. You can either unmute your mic or type it in the chat, and I'll see if I could give that a good explanation before I head out because I have an 8 o'clock meeting. All right, but let me know if you have any questions. All right, looks like we are all good here. All right, fantastic. Let me go ahead and start the recording.